have a good question for today's video. Can you come out? You look like a ghost.
Is that a pale joke? Can we do it from here tomorrow?
Yeah.
Alright. What do you got?
Ooh. Okay, so yesterday I was in the shower, but I still heard you and Drew talking about being reactive to the market instead of trying to forecast. And we always see people trying to forecast everything, so we need to talk about this.
I think it's a big problem. A lot of new traders get into trading and they start like trying to draw those arrows where it's like, okay, this is a support zone. And honestly, some people even identify the zones correctly, but then they try to say, okay, it's coming off this zone, sell it off the support. And I think a lot of the time why forecasting doesn't work is because it leads you to trying to call tops and pick bottoms. And what I mean by that is if it's falling, you try to buy it off the bottom thinking you're going to catch the biggest reversal in the world, or vice versa, it's at the top and you think it's going to fall now and you're going to catch the move short. But in reality, we know, and I hope you know from my other videos, that the Forex market, out of all the assets, all the investable instruments in the world, the Forex market trends the most. You've probably heard that before, right? You even knew that, right? Like currency markets are trending markets for the most part. Some periods of time they chop, but for the most part, they trend. So when you try to forecast and you try to say, okay, here we have this news release maybe coming, we're at this zone, the news is going to be bad, we should sell it. Instead of doing that, what I recommend is, number one, to stay in trend. Don't ever try to sell something that might be at the top. Just go find another trade. And same thing for things at the bottom. And number two, to kind of get you away from the forecasting, switch your mindset to a reactive model. And where that comes into play with your actionable statements is if-then statements for your trades. So, I'll give you an example. If I'm looking at a setup to go short Euro USD, instead of me saying, this news could do this, or this could do this, I say, if Euro USD does X, Y, and Z, which are rules in my trading plan, then I will react in this way. And that's how you stop forecasting and start reacting to the market. So you're letting the market tell you what to do instead of you trying to guess. It's kind of ridiculous, but it is fun to draw the arrows, and it is fun to think you can use some weird Ichimoku cloud indicator or whatever it is to identify trades, and it's just like, you don't need all that. Let the market tell you which way it's trending, wait for the proper entry at the proper price, and ride that trend. React. Don't predict.
I think we can talk about trend in another video too, like what it means to be in trend. Some people might not understand that.
Absolutely. We can even, I know we don't have the screens here, but maybe not tomorrow, one of the next days, we'll shoot a video talking about EMAs and TDI, just two indicators that we use and we teach people to use on how to read trend. I like that. That's a good idea. So stay tuned, guys. Next video coming soon. We're going to talk about how to read trends. So now you should understand why you should not be forecasting. You should be reacting. But some of you, like Riley said, might be wondering, how do I know which way the trend is even going, Austin? I'm new. I don't know. We're going to address that for you guys in a coming video. Give me a day or two. But I think we're going to enjoy this beautiful spa VIP area for now. So we'll see you guys in tomorrow's video.